everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and also for setups and a directional bias. So just to be clear, I'm looking at the options market as the basis for my planning and preparation, and I will talk about setups today, but the setups will be in an underlying asset, and you can take the trade any way you prefer, whether it's shares or futures or options. The analysis again is based on the options market, but the setups that I'll show are in an underlying asset, and again, the instrument that you prefer to trade is entirely up to you. All right, and questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat in YouTube for your questions and comments. All right, let's get started. And what I want to talk about today, my agenda for today, is to go over a couple of news items, economic data that was released this morning. Then I'll go through my positional analysis, and then I'll talk about setups. So first of all, the news today. At 8:30 a.m., the retail sales came out, and all of the numbers were negative and lower than expected. And that was at 8:30 a.m. Eastern Time. It didn't look like the market had much of a response to that data. And then at 10 a.m., Michigan consumer sentiment was released, as well as this one-year inflation, and both of these numbers came in higher than forecast, and the market definitely had a negative reaction to this data, and made for some very interesting setups. Both the QQQ and SPY were trading at their call wall levels, which generally are expected to act as resistance, and that's exactly what they did as this data came out. And also options traders were fading the move ahead of the data release as price, QQQ, and SPY moved up to their call walls. And thank you very much, RJ, for pointing out the QQQ call wall acted as resistance. And then I posted a setup, a divergent setup for SPX, moving up to the SPY call wall. I posted that in Discord. All right, so that wraps up the data for the week, and I'll talk about those setups in more detail in a few minutes. All right, let's take a look at charts now, and this is Bookmap showing the ES S&P 500 futures And before I dig into this chart, I'm going to take a look at a larger time frame. I'm going to go to a Thinkorswim chart for SPX, and this is just showing price for SPX and key Spotgamma levels. And let me point out a couple of things on this chart. First of all, SPX over the last 10 days or so has been trading in a fairly narrow range and attempted to break out of that range yesterday, and now is trading back within that range somewhere between around 40.70, 40.65 on the downside, and around 41.30 on the upside. So a very narrow range for the last few days, and SPX is now back in that range. And let me point out some of the key Spotgamma levels. These are provided to Spotgamma subscribers for a variety of platforms. Here, this is Thinkorswim, and these are key gamma levels. First of all, here's the put wall, back down at 3,800. You remember for the last couple days, the SPX put wall has been up at 3,900, and now it has moved back down to 3,800. That's a strike with the largest net negative gamma that can be expected to act as support. Here's the 4,000 level. That is the absolute gamma strike, or the key gamma strike, and that can act as support, resistance, or a magnet for price. Here's the 4,100 level, and there's a cluster of levels there shown on this chart. The key level is the 40.95 volatility trigger, and that's Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative, and that indicates that they have to trade with price to hedge their delta exposure. And above that level, like SPX is trading now, market makers' position on the gamma curve is positive, and that indicates that market makers will need to trade against price to hedge their delta exposure, and that tends to subdue volatility in a positive gamma environment. And then finally, here is the 4,200 call wall, the strike with the largest net positive gamma that can be expected to act as resistance. So those are the primary gamma levels, key daily levels that I track every day. And again, that's shown on a 20-day, 1-hour chart. And I just want to point out, kudos to Lewis, who posted a very simple think script in Discord that is showing, he had it showing the difference between SPX and ES, and I just flipped it around to show a positive number showing the difference between ES and SPX. This is showing in real time, and that number is somewhere between 25 and 26. And so I just took the number that and I'll show why that's important in just a minute when I look at the Bookmap chart. So there's the difference between ES and SPX. That may be difficult to see up in that upper left corner, but the difference is somewhere between 25 and 26, and I just used a difference of 25.5 for my charts. So thank you very much to Lewis for posting that. All right, let's take a look at another chart now. Before I get to Bookmap, I want to take a look at another SPX chart. This is just showing price action for today. So this is showing price action for SPX and the levels that are in play for today. And here is probably the primary level. This is the 41.30 level. This was noted as resistance yesterday and support today, and earlier today it did act as support briefly, and now as price moved below, it acted as resistance. And note up here, we'll talk about this reversal in a minute, and that reversal was at the SPY 415 call wall. All right, let's take a look at Bookmap now. So here are the levels on the Bookmap chart. First, I'm showing Spotgamma cloud nodes. These are again provided by Spotgamma to subscribers for a variety of platforms, and for Bookmap they're provided in the form of cloud nodes, which are updated automatically sometime overnight. So you get new levels every day automatically. Right now, Spotgamma is using a 27-point difference between ES and SPX. And I calculated, again, just from looking at that little think script, the difference I'm using is 25.5. So the cloud nodes are showing the key SPX levels, and again converted to an equivalent ES number, 27-point difference. So there's the 4150 level. And then I have my own cloud nodes, and I'm also showing the SPX levels. This was noted as a pivot level in the Spotgamma AM Founders Note. And there's the 4150 level. And I have adjusted it so it's 1.5 points down from what Spotgamma is showing. And then I'm also showing the key daily levels for SPY. And there's the 415 call wall. And note that acted as resistance just as the consumer sentiment data came out. And when I talk about setups, I'll show that options traders in SPX were fading that move ahead of the data as price approached that 415 call wall. So right now the SPY 410 key gamma strike shown here seems to be acting as support. So again, that's the SPY 410 key gamma strike, the SPY volatility trigger at 411. And note here's that 4130 level that I pointed out on the SPX chart, acted as support for a while, then as price moved lower, acted as resistance. All right, so we'll talk about setups more in just a few minutes when I finish the positional analysis. So one of the keys for me in my planning and preparation is to get these levels right. On the ES chart, I'm showing the SPX and SPY levels, the key gamma levels. Those are, I think, both very important, as you can see here, how ES reacts at these different levels. All right, there were a few changes in levels from yesterday. And first of all, as mentioned before, the SPX put wall shifted down from 3,900 to 3,800. So the SPX put wall has been down at 3,800 for quite a while, shifted up to 3,900 for a couple of days, and now it is back down at the 3,800 level. And SPY, the volatility trigger, shifted up from 408 yesterday to 411, and then the call wall also shifted up from 412 to 415. And then the QQQ volatility trigger shifted up slightly from 315 to 316, and the key gamma strike shifted higher from 315 to 320. So there's a pretty high concentration of gamma at the 320 level for QQQ. All right, let's take a look at the gamma charts now, and we'll see where those levels come from. Looks like I need to do a refresh here. We'll start with SPX. Going to expand this chart. So this is the absolute gamma levels for SPX. Market makers position at these levels. And the orange bars are showing positive gamma or call gamma, and the blue bars are showing negative gamma or put gamma. And here is the 4,000 key gamma strike. That's the strike with the largest absolute gamma that can be expected to act as support, resistance, or a magnet for price. Here's the put wall down at 3,800 again, the strike with the largest net negative gamma. And then here's the call wall at 4,200, the strike with the largest net positive gamma that can be expected to act as resistance. So that is SPX. Take a look at SPY. Going to zoom in a bit here. So for SPY, there's the 410 strike. That's the key gamma strike. That's pretty obvious. Strike with the largest absolute gamma. Here's the put wall, strike with the largest net negative gamma. That's also pretty obvious. And then here's the 415 level, the new call wall that acted as resistance today. The strike with the largest net positive gamma. All right, usually I have to do a refresh before I show QQQ. And that's going to be the case today. Do a refresh. Go to QQQ. And we'll zoom in. And there's that concentration of gamma, especially call gamma, at the 320 level. So that is the key gamma strike, as well as the call wall. And then the put wall for QQQ is still down, remains down at 300. That's QQQ. The other thing that I want to take a look at are the Vanna models. And we'll focus on SPX. And what this is showing is how market makers' delta notional or delta exposure changes with price. And first of all, I'll focus on price alone. That's shown by this light gray curve. And for those of you who've seen this before, I'm sorry, this may be repetitive. I'm not sure if who's new and who's been here before, but I'll just go over this quickly. So this is showing, this is based on information at the beginning of the day, showing how market makers' delta exposure changes, again, with changes in price. And what this is showing is that primarily market makers' delta exposure will increase as price increases, and they have to sell futures to hedge their delta exposure as price increases. Market makers always want to remain delta neutral. So if price increases, they have to sell futures to hedge their delta exposure. And that's shown by the light gray curve, and then this pink purple curve, is showing how their delta notional changes with changes in price, again on the horizontal axis, as well as changes in implied volatility. So this is a little bit more realistic, taking into account the changes in implied volatility. And what this is showing is that as price increases, implied volatility, any drop in implied volatility, is not going to provide much of a tailwind over delta. That's typical of a positive gamma environment. There's no put Vanna available to boost a rally. And then on the other hand, as price decreases and implied volatility increases, market makers' delta notional will increase, and they will have to sell futures to hedge their delta exposure as price drops. And that is the Vanna effect, the change in delta with a change in implied volatility. And note the kind of the transition point here is just around, for the purple curve, like 4170 to 4150, something like that. All right, so that's the Vanna model. That's for SPX. And let's take a look at SPY. And just a slight shift in SPY. And QQQ. Right, so that's the S&P 500 and the NASDAQ. All right, let's take a look at some data. And what I want to take a look at is market makers gamma notional. And this will just reinforce what we just saw in the Vanna model. And what this is showing is market makers gamma notional, or their position on the gamma curve. And note for SPX, SPY, NDX, and QQQ, those are the ones that I track. Market makers' position on the gamma curve is positive. So for an index, that means that traders, Spotgamma assumes that traders are short calls, market makers are long calls, hence the positive gamma position, and they will have to sell futures as price increases to hedge their delta exposure, and then when price drops, they can buy back their short futures. So in a positive gamma environment, they're trading against price, and that tends to subdue volatility. So that tends to subdue volatility in a positive gamma environment. And Truman asked, does the purple line, I assume you're talking about the Vanna model, combine the effect of implied volatility and price, or just the impact of implied volatility? I assume it includes both. But that is, you can always go to the Spotgamma Help Center to get more information on that. And I will certainly, I'll do that after this webinar to confirm that. But my assumption is that the purple line is really the one that you want to take a look at. All right, so Truman, again, I'll take a look after the webinar, and I'll post a response in Discord, and you feel free to look for yourself as well. Okay, so that is the planning preparation that I do for index products, and this really is just setting the stage for what to expect today again, given this data, expecting how market makers are likely to react. So the key for me recently has just been to, like I said, get my levels set correctly on the charts, understand market makers' position on the gamma curve at the beginning of the day and how that may change from day to day, and then to watch the price action, the order flow in Bookmap, as well as the hedging flow in Hero. One of the reasons for that is the importance recently of very short-term trading has really governed price action from day to day. And we'll take a look at some examples of that. So let's start with setups. And by the way, this is Friday. Typically, I look for a call gamma unwind in stocks in my watch list. And I checked for that this morning, and there were some stocks that did have a significant amount of gamma expiring today, but they did not seem to be call dominated. So what I'm looking at is this next expiry gamma percentage, and then I'm looking at the date, and that's the expiration date, so that's all today. And these stocks, Snowflake, Nvidia, Tesla, and Google, all have somewhat significant amounts of gamma expiring today, especially Snowflake and Nvidia. But we'll just take a quick look at this composite view, and this red underneath the curve indicates that this stock, the gamma, it's put dominated. So there's no really, the call gamma unwind occurs when stocks that have green somewhere under this curve, that are more call dominated in a certain price range, and those calls, typically traders will buy calls that expire on Friday. So today is Friday expiration. They buy weekly calls, and those calls start to lose value as expiration approaches. And that is the charm effect, the change in delta with the change as time passes, change in time. And market makers, when traders buy calls, market makers sell the calls. They have to buy long stock to hedge their delta exposure. And then when those calls start to lose value, they can sell their long stock hedges. But that's not the case. There's no call domination. This is all pink or orange or red, well, except for Google. So there may be a call gamma unwind going on Google, but this number 26% is a little bit under the threshold that Spotgamma recommends of about 30%. So this is not, and I don't actively trade Google typically, so this is not something that I was looking for. So what I was watching is, first of all, the S&P 500. This is the hero signal. For those of you who may not be familiar with this, this is showing price with the white line and the hero signal with the purple line. And what this is showing is a combined signal for SPX, SPY, XSP, which is not significant, and also new this week, ES futures. So this is a combined signal taking options trades for SPX, SPY, and ES and combining that all into one signal. And recently, what I have found is SPX provides the signal that is closest to price action and providing the best signal. So let's just take a look at, so that's the combined signal. And what I was watching is the setup in the morning for the reversal at the 4:15 SPY 415 call wall. So there's the combined signal. And let's take a look at the individual components now. So there's SPY. Really not, there was a confirmation for the move up in the morning for SPY. But SPY recently has not provided a very clear signal. So that's SPY. Now let's take a look at the S&P 500 futures. So it took the futures signal a little while to respond, but now traders are taking negative delta positions in ES futures. So we've looked at the combined signal, we've looked at SPY and ES separately, and now let's take a look at SPX. This is what I was watching this morning, and this is what I was using yesterday. I posted a very nice setup. Yesterday I posted this in Discord at the end of the day, or at the end of the evening really, and posted it on Twitter as well. A very nice setup, long setup, using just the SPX signal. And my recent experience is that SPX alone is providing the clearest signal for the S&P 500. The one that I feel most confident acting upon. So let's zoom in here. And yesterday it was all 0 DTE options trades. And traders were buying 0 DTE SPX calls and selling, which is kind of unusual, selling SPX puts. Normally they're buying calls and buying puts, and it's just a matter of seeing who's winning, the call buyers or the put buyers. And yesterday they were buying calls and selling puts, both positive delta positions. So today I was just looking at the total hero signal, and remember that this price for the S&P 500, ES, SPX, SPY, all approaching the SPY 415 call wall that should act as resistance. And note that SPX traders started taking negative delta positions about 15 minutes before 10, before the data was released. And that set up a great short at that 415 resistance level. So the way that I approach this, when I see that divergence, when I see the divergence in hero signal, then I'll look at the Bookmap chart and look at a potential level for a reversal. And there it was, the 415 call wall for SPY, again expected to act as resistance. So Bartos asked, please have a look at the 0 DTE, and coming right up, we'll take a look at that. So this is showing next expiration, and that for SPX, that's today, since SPX has options that expire every day, and that initially provided a clear signal in the morning, very close to the total signal, all trades, all expirations. And just to be thorough here, the hero signal did confirm along from the open. All right, let's zoom out now. All right, so it looks like the 0 DTE traders are now a little bit more bullish than the all expirations. So this is the green line. This green line is showing next expiration, or 0 DTE for SPX, and then the purple line is showing all expirations. And RJ asked, can we break out puts and calls for SPX? Sure. All right, so I'm going to avoid confusion, we'll look at, first of all, we'll turn off next expiry. So we'll just look at the total signal, and we'll look at puts and calls. And this is a little bit unusual. Typically, there's a pretty steady line of call buyers and a pretty steady line of put buyers. And right now it is showing kind of a mixed signal here. So traders initially were in the morning in this short setup. They were selling calls and started buying puts sometime later. That's shown by the falling blue line. And then now, more recently, they've started selling puts, shown here as price moved down to the SPY 410 key gamma strike, and have also started buying calls. So that is the total signal. So put sellers into the low. So traders were selling puts, started selling puts at the 410, excuse me, they started selling puts as price approached the 410 level, that's the SPY 410 level. Let's go take a look at Bookmap. And so we're going to look at somewhere between 12:50 and 1 o'clock. So there's, zoom in, so they started selling puts as price approached this SPY 410 key gamma strike. So they were, just like they did before, at the 415 level, they were fading that move, starting to take negative delta positions as price approached the 415 level, and then as price approached the 410 level, the key gamma strike, they started taking positive delta positions. And we'll take a look at the SPY chart also. That was just a beautiful short from the 415 call wall down to the 410 key gamma strike. All right, let's go back and take a look at Hero again. All right, so that is the all expirations, puts and calls. Now let's take a look at next expiration. All right, so the green line is calls, and the blue line is puts. So this is pretty typical for 0 DTE. Traders are buying calls, shown by the rising green line, and they're buying puts. So that's in the 0 DTE. So the simplest thing to do is just look at the total signal. And for all trades, all expirations, and this number, the notional value, is negative, minus 417.8 million. So net, options traders in SPX are taking negative delta positions. Price continues to move lower. Well, let's see, I'm not showing the complete chart. Sorry. All right, so that position is at the time that I was looking at it at 12:30, it was negative, and now the total notional value is positive. So they're again taking positive delta positions as price approached that 410 level. All right, let's just take a look at the total signal for the S&P 500. And overall, that looks pretty similar to the SPX, just slightly more bullish. All right, so that is the S&P 500. And I thought that, especially looking at the SPX chart, which recently has given me the most confidence in taking a trade, led to a great short in the morning. All right, the next setup that I want to take a look at is QQQ. And again, thank you to RJ for pointing this out in Discord. And this is a very clear signal, which doesn't always happen with QQQ, but today it was just a beautiful setup here. Notice the call wall and the 320 key gamma strike, and remember all that call gamma that we looked at in the absolute gamma levels charts. And traders started fading this move as price approached that call wall level, setting up a great divergent short. And let's go take a look at Bookmap. So there's SPY. And again, the great setup. Took a while for it to play out, but a good 5-point move in SPY. Here's QQQ. There's the reversal at the 320 call wall. And notice all the activity up at this level. Buy sweeps shown by these small green dots here, and then sell sweeps as well. Buy sweep, small green dots, sell sweep, small red dots, and eventually this resolves as aggressive sellers come in, shown by the pink volume dots, start to move price lower. And now down to the 316 volatility trigger. And I meant to look at ES in Bookmap here and show how to read this setup as well. And let me zoom in. Actually, let's zoom in on the morning session. And I think the order flow in Bookmap here for the ES is typically the easiest to read compared with SPY and QQQ. And you can clearly see a couple of things here. First, iceberg orders coming in. This, it may be easier just to Show that here. I'm showing that pink number with the E. 791 contracts, iceberg orders. Large traders use iceberg orders to hide their size. And there was a stop run up into that level, shown by this rising orange line. Meanwhile, large traders are fading the move with their iceberg orders. And note the shift in order flow from green dots on the way up, green volume dots, buy minus sell, buyers are winning, to these pink dots, sellers are winning there. There's a market sell orders dominating as price moves down below the 4150 level, below VWAP. And again, I showed how the 4130 level acted as support initially and then resistance. And price moved on down, gradually down to the 410, SPY 410 key gamma strike level, or just above it. Zoom back out. And these lines on the subchart, this is a little bit unusual to see iceberg orders going the same way as stop orders and cumulative volume delta. What I'm looking at in the subchart, this yellow line, those are sell stop orders helping to fuel the move lower. And the light blue line is showing iceberg orders. And typically, often large traders will use iceberg orders to buy weakness and sell strength. And here they were selling weakness. They were joining the move lower. And then finally, cumulative volume delta, shown with the dark line that shifts to the pink line as cumulative volume delta goes negative. So that was the move lower in ES, SPY, and QQQ. And now, as we saw, options traders are starting to take positive delta positions and prices moving higher. All right, I've got a couple of minutes left. About 10 minutes left. Let's look at some stocks. First of all is Apple. Let's take a look at Hero. So there's QQQ, the great setup. Let's take a look at Apple. So first thing in the morning, there was a confirmation long for a quick long. And then this is similar to SPX and QQQ. Note the divergence here. Heroes, the purple line, starts to make lower highs. Price is making pretty much equal highs, and then follows a few minutes later after the data release at 10 a.m. Oh, and I missed your question in Kenobi in Discord. Do I have a recommendation for online resource or book for good understanding of gamma and its use in the impact for hedging? So your first resource, the best, would be the Spotgamma website and the Spotgamma YouTube channel. The Spotgamma website has a lot of free resources. Just go to the free resources link on the Spotgamma website, and they have a pretty thorough help center there, support center. And then the second resource would be the Spotgamma YouTube channel. Both are highly recommended. And if you're not listening now, I'll post links after the webinar. All right, so that's a setup in Apple. Let's take a look at Bookmap now for Apple. There's the reversal at the 166 level. Note these sell sweeps coming in. Small red dots. Multiple sell sweeps. Not a lot of range, a couple of points, moving price lower to the 164 level. So that was Apple. And let's take a look. Take a look at Microsoft. And we'll take a look at Hero for Microsoft. And confirmation long and short. Quick long in the morning. Traders are taking positive delta positions. Pretty similar to Apple. Let's zoom in on the morning. Note how Hero levels off. Let's just see what traders are doing. So this is showing that traders were buying calls in the morning. They stopped buying calls. And they were just slightly buying puts. And then as the data came out, they started selling calls. Price moves lower. Let's go back to the total signal. And net, it is negative delta. Let's go take a look at Bookmap. There's Microsoft. And there's the reversal at 10 a.m. Note the shift in order flow. We've got green dots, market buy orders, these volume dots. Moving up, order flow shifts bearish. Pink dots, market sell orders, as well as that sell sweep there shown by the small bright red dots. Price moves lower. Then moves up, does a retest, a VWAP, and moves down past the 285 hedge wall, down to the liquidity, the price target at 284. And note if traders decide to take price lower, it looks like they got through the 284 liquidity and now it has come back in. But if they move price lower and get through that 284 and 283 level, there's the 280 put wall. And given the time of day, that may be a long shot. Let's go see what options traders are doing now. So they have stopped taking negative delta positions and looks like slightly bullish positions now with a sloping Hero line starting to slope up about one 1 o'clock, 1:30. Right, so that's Microsoft. Let's take a look at NVIDIA. NVIDIA is up and down today. Hero provided confirmation long. Pretty good short signal here. Hero leveled off. Starts to move down. Price moves down with everything else. Confirmation long. And a little bit of a lagging indication for a short setup. And this vertical line here shows a block order, a large institutional order. And let's just see what that is. So it looks like call buyers coming in, a large block order for calls. And that helps to move price up at around 130, 140, something like that, around 140. All right, let's go take a look at Bookmap. Go to NVIDIA. And choppy session, pretty wide range up and down. And notice how price is somewhat focused and accumulating at this 265 hedge wall. That's showing the session volume profile. Volume concentrated so far at that 265 level. With Hero leading the way up and down, or providing a good strong confirmation signal. Let's take a look at Tesla. I'm going to zoom in just on the so the morning, I guess I really wouldn't know how to interpret this. Hero is not showing much in the morning, fairly flat. And price moved down toward the put wall at 182 before reversing higher. And I would take that as a confirmation long, then definitely a divergent short setup with a lot of other stocks. Options traders were fading the move higher. Let's go take a look at Bookmap. And there's Tesla, the reversal, very, very fast V-shaped reversal just above the put wall there. There's the put wall. And then the reversal lower, the absorption shown at the 186 level. Price did make it down to the 182 put wall, and now is moving higher past this 185 hedge wall. And let's go back and see what options traders are doing right now. So far today they have been slightly net buyers of calls, still buyers of puts as well, but they have started selling those puts now as price hit the put wall, they're selling those puts and price is moving higher, and they've starting buying calls again, shown by this rising orange line. And the total signal gives a more clear picture. All right, so that's Tesla. Let's just take one last look at the S&P 500. We'll start with the total signal. Definitely bullish. Note the value there, 1.23 billion. SPX, 454 million. ES futures, and that's actually negative, 1.23 billion. Let's take a look at SPY. $1.96 billion. All giving this total signal of 1.19 billion. Okay, so I was looking at SPX, the hero for SPX this morning, that set up that great short in the S&P 500, ES, SPX, SPY, and also, again, as RJ pointed out, the great setup for a QQQ short with the reversal at the 320 call wall, key gamma strike call wall. All right, that's all I have for today. Hopefully I've answered your questions. I want to thank you for watching. Thanks for your questions and comments. And everybody have a great weekend, and I will see you on Monday. Thanks again. Bye.